People often say the same thing again and again. You need a lot of money to start investing, but the truth is completely different. Today I'm going to show you how just $50 per week, yes, only $50, can slowly grow into $300,000, $500,000, and even over $1 million if you stay patient and consistent. And what's even better, you don't need to be a stock market expert. You don't need complicated charts. You don't need to predict the market. All you need is a simple plan and the discipline to follow it. Let's begin the journey. Section 1. Why $50 per week actually works. Most people underestimate the power of small, consistent investing. They focus on big numbers and end up doing nothing. But $50 per week works for 5 simple reasons. Reason number 1, consistency. Small weekly investments train you to build a habit, and habits are more powerful than motivation. Reason number 2, low risk approach. You're not putting a huge amount at once. Even if the market dips, your investment continues steadily. Reason number 3, affordability. $50 is an amount most people can manage, even with tight budgets. Reason number 4, dollar cost averaging. This is one of the most underrated strategies. When prices are high, you buy a little less. When prices are low, you buy more. Over time, your average cost becomes balanced, and you avoid the stress of timing the market. Reason number 5, compounding. This is where the magic happens. Your money grows, the growth also grows, and over many years, it becomes massive. If you invest $50 per week, 10 years gives around $38,000 to $45,000. 20 years gives $160,000 to $200,000. 35 years gives $800,000 to over $1 million. This isn't gambling. This isn't luck. This is math and time working together. Section 2, where your $50 should go. Now the most important question. What should you buy with $50 per week? Here's a simple 3 ETF strategy, trusted by long-term investors worldwide. ETF number 1, S&P 500 Index, 40%, $20 per week. Best ETFs to choose from: VUIVV, SPY. The S&P 500 includes the top 500 companies. These are strong, stable, and proven businesses. It's one of the most popular ways to invest for long-term growth. Historically, the S&P 500 has delivered around 10% yearly returns. These companies innovate, they grow, and your money grows with them. ETF number 2, Total Market ETF, 40%, $20 per week. Best ETFs, VTI or SCHB. This ETF gives you exposure to over 4,000 companies. Small companies, mid-sized companies, large companies, tech, finance, healthcare, manufacturing, everything. It's one of the most diversified investments you can ever own. ETF number 3, International Market ETF, 20%, $10 per week. Best ETFs, VXUS or XS. This gives you exposure to around 7,000 companies outside your country. Companies from Europe, Asia, Australia, and developing economies. Because growth doesn't come from just one place. Global diversification reduces risk and strengthens your portfolio. Section 3, the exact weekly breakdown. Here's exactly what you do every week. $20 gives VU or IVV. $20 gives VTI or SCHB. $10 gives VXUS or XS Total. $50 per week. You can choose Friday, Monday, or any day. Consistency matters more than timing. Even if the market goes up, you invest. If the market goes down, you still invest. This slow, steady approach beats emotional investing every time. Section 4, long-term growth example. Let's break it down even deeper. $50 per week equals $2,600 per year. Now imagine this money growing at a 10% average annual return. Here's what happens. After 10 years gives around $45,000. After 20 years gives around $160,000. After 30 years gives $450,000 to $600,000. After 35 to 40 years gives $800,000 to over $1 million. Not because you invested a lot, but because you invested consistently. Section 5. Common mistakes that hurt investors. Avoid these mistakes. Checking your portfolio every day. It creates stress. Investing is slow, not fast. Panic selling when markets fall. This destroys long-term returns. Buying high-fee funds. Fees silently eat your profits. Trying to time the market. Nobody can predict highs and lows. Investing only when the market is rising. The best time to invest is regularly, because the market rewards patience. Remember this. Time in the market is greater than timing the market. Section 6. Final motivation. If you invest for only 1 year, nothing big will change. If you invest for 3 years, you will see slow progress. But if you stay consistent for 10, 15, 20 years, your entire financial life will transform. Small decisions today create big results tomorrow. Start small. Stay consistent. Don't stop. Your future self will thank you. Call to action. If you want the next breakdown, the $100 per week investing strategy, or how to build a $1 million portfolio from scratch, just comment yes.